Nobody teaches you this in school, but there's an actual ranking system billionaires use to decide which tax move to make first, and tonight, we're grading every single one of them. S tier, a tier, all the way down to F. Real structures, real strategies, ranked by exactly one thing: how much wealth they protect from taxes, lawsuits, and time itself. Everything on this board is legal, filed, disclosed, used by real families today. The only thing separating you from using half of these is information, not money. By the end, you'll see the entire tier list laid out, and exactly which moves are worth copying at any income, and which ones only matter once you're worth 9 figures. Here's how we're grading. Every entry gets scored on 3 things: how much tax it actually eliminates, how well it survives a lawsuit or a death in the family, and how realistic it is for you specifically. F tier means it barely works. S tier means it's the closest thing to a cheat code the tax code legally allows. Let's start at the bottom. F tier, dead last, just paying whatever the bill says and hoping for a refund in April. It's not a strategy, it's the absence of one. And it's exactly what happens to anyone who never learns a single move on this board. The IRS loves this tier. No planning means no deductions, no shelters, no protection, just the sticker price, paid in full, every single year. D tier, maxing out a 401k or Roth IRA. For a normal income, this is genuinely great advice: tax-deferred growth, employer matching, real money saved. But it caps out low, sometimes around $20,000 or $30,000 a year. For a fortune measured in the billions, it barely moves the needle. D tier, writing a check to charity every December and taking the standard deduction. It helps. It's also the least efficient way to give. No control over the timing, no shelter for capital gains, no lasting structure behind it. C tier, the holding company. One entity that owns your businesses, real estate, and investments instead of you owning them directly. If one piece gets sued or collapses, the damage stops there. It can't legally climb up and swallow everything else you own. Powerful, but common. Every serious accountant knows how to set one up. It protects you. It doesn't make you invisible. C tier, real estate depreciation. The IRS lets you write off a building's value over decades, even while it's going up in market price. Real savings every single year. But it's capped by how much real estate you actually own. It doesn't scale to cash, stock, or a business itself. B tier, the 1031 exchange and opportunity zone funds. Sell a property, roll the gains into a new one, and the capital gains tax simply never triggers. Do it enough times, in the right order, and you can defer tax on real estate gains for an entire lifetime, sometimes permanently. It moves serious money. The catch is timing. Miss the window to reinvest, and the entire deferral collapses at once. B tier, the donor-advised fund. Donate appreciated stock directly, skip the capital gains tax entirely, and take the deduction the same year. You keep advising where the money goes for decades. It's generosity and tax strategy folded into one document. Hard to separate, and that's the point. A tier, the dynasty trust. A legal structure that can survive for centuries, passing control to the next generation without the assets ever fully changing hands. No single moment where an estate tax, a lawsuit, or a divorce can grab hold of everything at once, because no single person ever fully owns it. It's not a loophole. It's architecture. Once it's built, it keeps working for 100 years without you doing anything at all. A tier, the family office. Once a fortune crosses roughly 100 million, families stop hiring outside advisors and build their own private company instead. Lawyers, bankers, accountants, all working for one client. It's expensive to build, but once it exists, it runs the entire tier list underneath it, automatically. S tier, and this is where it gets serious: private placement life insurance. An entire investment portfolio, growing completely untouched by tax, wrapped inside an insurance contract. Hedge funds, private equity, almost anything can sit inside it, compounding for decades. When it eventually pays out, it often does so with little to no tax owed at all. Most tax attorneys have heard of it. Most Americans never have. That gap is exactly why it sits this high on the board. S tier, and the single most powerful move on this entire list: buy, borrow, die. Buy assets that grow. Never sell them. Borrow against them instead, at a fraction of what selling would cost in tax. Spend the loan, not the stock. Then, at death, the asset's cost basis resets entirely to its current value under the law. Decades of gains simply vanish from the tax equation, forever. Stack a zero tax address like Florida or Puerto Rico's Act 60 on top of it, and you've combined the two most powerful moves on the entire board into one strategy. Nothing else on this list gets this close to erasing tax on a lifetime of gains. It's not a secret. It's just rarely explained this plainly. Here's the complete ranking, top to bottom, by borough die and PPLI in S tier, dynasty trusts and family offices in A, 1031 exchanges and donor-advised funds in B, holding companies and real estate depreciation in C, retirement accounts and basic giving in D, and doing nothing at all, dead last in F. Notice the pattern. Every tier up the board isn't about more money. It's about more structure. The same 6 or 7 ideas, just built earlier and bigger. You don't need 9 figures to start climbing this board. An LLC costs a few $100s. A revocable trust, a few thousand. A donor-advised fund, whatever you choose to give. The family sitting in S tier didn't start there. They started in C and B, the same tools available to you right now, and simply never stopped building. The tax code isn't rigged against you. It's just written for people who bother to read the instructions, and almost nobody ever does. If you only take one thing from this board, take this: structure beats income. A modest fortune, properly organized, outlasts a huge one that never was. Everything here is legal, filed, and used today by families at every level of wealth, not just the ones you read about in the news. Now you know where every move on this board sits. What you build with that ranking from here is entirely up to you.